Hey guys, welcome back to another video. My name is JJ, and in today's video, we are doing a very basic walkthrough of how to sell put options for weekly or monthly income. Now, some of you may have a decent understanding of how to do this already, and you're looking for maybe just a little more information. Maybe you are the first time stumbling upon selling put options, or you just clicked on the video because you saw the title of making some weekly and monthly income. What I want to do today is do a full step-by-step walkthrough. We're going to take it nice and easy. We're going to do an actual example in my portfolio, my Robinhood account, and we will be talking about the different things to look for, why you may want to sell a put option, and I hope this is very easy and very valuable for you guys. Now, first, before we get into this, I gotta say, if you guys want some free stocks, you can open up some different brokerages. I have links down below in the description. You literally just open the brokerage and you get some free stocks for doing that. It also helps out the channel. Again, there's links down below in the description for that. Now, we're also not going to get into every single detail of selling put options. If you guys want more understanding about the Greeks, delta and theta decay and all that, I actually have a options trading course. There is a link down below in the description where you can sign up for that. And we talk not only about selling put options, but we talk about, understanding in and out of the money options, the Greeks. We talk about buying and selling, put and call options. It's a little over 3 hours of content where you guys can literally learn a very good basis, understanding, beginner foundation with trading options. So again, there's a link down below in the description for that. So, okay, this is my Robinhood portfolio. This is where I just tend to do more of my options trading and maybe buy some growth stocks and whatnot. My main portfolio is actually with Fidelity now. If you guys want to check that out, I just had a video come out about that not too long ago showing my full portfolio with Fidelity. But what we're talking about today, again, is selling put options. So when you are selling a put option, you are choosing to buy a stock at a certain price. Now, that may sound a little confusing at first. So what I want to do here is I actually want to run through an example of a stock I'm currently doing this for. And that is Wish. The ticker symbol is Wish, but it's Context Logic. And I actually just sold a put option. That's why you see this 100 shares here, because that put option got assigned to me that I sold, that cash secured put. That's another name you can call it, is a cash secured put. I got assigned the 100 shares, and we'll explain how all of this works right now. So what we're going to do is we are going to click Trade Wish Options, and I'm going to move me over here so you guys can see this a little better. Now, the first thing I want to bring up here is talking about, how do you set this up? What are you looking for whenever you are selling a put option? So who is this even made for? What type of investor would want to, write up a contract to sell a put option? Well, that would be someone who is bullish or won't think the share price is going to go down in the near term. Or you may have been doing some due diligence on this stock. And for example, let's say it's Wish, and you say, hey, I feel comfortable buying Wish at $11. And if the stock price goes down to $11, I know I want to buy that stock there. So why not earn a little extra income on waiting for that to happen? And the way you can do that is by selling put options. So the first thing we're going to look at here is how to set up this trade. So you want to make sure that you have sell selected, and you want to make sure that you have put selected. So now that you know you have selling a put, you can come over here and you can select your expiration date. So that is when the option will expire. And what an option really is, it's a contract between a buyer and a seller of an agreement, saying a seller of an option is willing to either purchase or sell shares, depending if you're doing a call or a put, and that buyer is buying that contract from the seller. Now, I know it may sound a little confusing, but we're just worried about the setup here. So this is the expiration date. I usually like to sell my put options on a weekly basis. You can usually earn a little bit more that way, and also that time period of having that collateral out there is not as long also, because you also do like 30 to 45 days. I've done that in the past. But I also don't like having my collateral out there for, a very long extended amount of time. And I'll get to what the collateral means here in a second. So again, we're going to do for the earliest expiration date for July 9th. Now again, what this expiration date means, you have until July 9th. Currently, whenever we are filming this, it is July 6th, so that's in a few days. That's being Friday. Today is a Tuesday. So now we're looking at strike price and how to set this up. So again, I said, this is for someone who thinks maybe if you're wanting to sell put options on Wish, you think Wish is going to keep going up in price. So you are going to sell a put option with a strike price that is lower currently, so out of the money of that current share price. So again, let's look at the $11 strike price. So what this is saying, this strike price right here at $11 means that if come July 9th at the end of the trading day or before that, if the share price here of Wish currently trading at 12.45, let's say on July 9th at the end of the trading day, the share price of Wish will be at $10.50. So it will be under this $11 strike price we have selected here. It would be under that, which means you will most likely be assigned however many shares or however many contracts you set up. So now let's look at actually purchasing this thing here. So a contract, when you hear contracts and options, that means every one contract stands for 100 shares. Now you can only work in contracts here. It's not like buying a stock where you say, oh, well, I only want to purchase, 65 shares. Well, it doesn't work like that. You have to do it on a contract basis, which again, every one contract equals 100 shares. So that is what we are going to do for this example, is we are going to be doing one contract on one contract basis. So now what that means is we are going to be selling this put option with the $11 strike price. And at that one contract, the 100 shares, that means, here it comes back to that collateral I was talking about earlier. Now we have to make sure that we have $1,100 in collateral. Now, how did I come up with that? That is because if you take the $11 strike price and you multiply it by the 100 shares, since we're doing one contract, that's $1,100 you would need to purchase 100 shares at the $11 strike price. You see how that's kind of coming together now? Again, I'm just going to summarize here real quick. When you're selling a put option, you are agreeing to purchase 100 shares or however many contracts you have. So, for example, let's change this to 2. Now we would be agreeing to purchase 200 shares at the $11 strike price because we did 2 contracts. So let's do that again. Let's do that math. So now we would have the 200 shares times that $100 strike or $11 strike price. Then we would need to have $2,200 in our cash account to be able to make this trade. So you see how this down here, my buying power available is only $58. I would need, if I'm going to have this example up here of let's change this back to 1, of one contract, I would need to have at least $1,100 in my buying power to make this work. Because, to say again, if the share price drops below the $11 by my expiration date or thereafter, then I will be forced to buy the 100 shares of Wish at $11. Now, one thing to keep in mind here is if this share price plummets to $4 a share, then you would still, after the expiration date, would have to purchase those shares at $11, even though it's currently trading at $4. So that's a risk you take on whenever you're, whenever you're selling put options like this. Is something like that could happen. And that's why I'm also saying, like, just because I'm using Wish here as an example, that doesn't mean I'm saying to go do that. This is actually more of a riskier type way to sell put options. I usually like to do this on, something like AT&T or AFL, Aflac, like a relatively flat trading stock, because you're not going to see as much price movement. But again, this is just a stock I'm doing this on currently. That doesn't mean you should be doing that for yourself. Okay, so now we've talked about, actually making the trade, why you would want to do that, what kind of person this may be for. And another thing I need to make here, another point is, you do not want to be doing this on a stock that you're not okay owning 100 shares with. Because if, like that example we talked about, if it drops to $4, well, now you're stuck holding, 100 shares of a stock at $11 and you're holding bags in that company. You need to make sure you're doing this with a company that you are okay to own for the long term. I just want that to be clear. Make sure you're doing this on a stock that you are okay getting a sign those 100 shares or however many contracts you do, because you never want to be worrying about assignment. You don't ever want to be worrying about like, oh crap, Wish is down trading at $9 a share. I don't want to get assigned come Friday and have to purchase these, 100 shares at $11, because as soon as you place this trade and the trade gets fulfilled, that collateral, that $1,100 at this $11 strike price, will get pulled out of your account until you choose to buy to close these sell option, these put options. So let's look at making the actual trade now. So we decided that we're okay with owning 100 shares. If it gets down the $11 price, we're going to be earning about $8 in premium, which I'll explain that here in a little bit more once we talk about actually making this trade. So here's the limit price. This 0.5 or this 5 cents and 10 cents is showing you the bid ask spread. So you can usually get in here in between here. If you want this to execute automatically right away, you can go more on the lower side because you'd be earning less amount in premium. So we'll set it to 0.05. Now it says here I do not have enough collateral. That's because I don't have the $1,100 in my account. But again, this is just for an example. So you'll see this premium over here, this price. This is premium. This is what you earn. This is how you earn that income on a weekly and monthly basis. As soon as we're setting up this trade, and let's say I'm okay with earning the 5 cents per share, that's how this premium is set up. This is on a per share basis. So let's go back here and look at this. And what does that mean? So we're going to do one contract, correct? And we are going to be showing the premium here of the 0.05, the 5 cents. Again, we are going to be earning that as a credit per share. And one contract is 100 shares. That's how you're seeing this minimum credit here of $5, because they take the 5 cents per share of the premium right here, multiply it by the 100 shares that you would have to purchase, and that gives you $5. So if you look at, for example, if you go with this $12 strike price here, that would be 38. So if you did let's do this. Let's make this work. So let's look at this example of the $12 strike price. So now again, we're doing the one contract. We're agreeing to buy 100 shares at the $12 price target, or $12 strike price, and we have a limit price set here for 0.35, giving us a minimum credit of $35. So now you can see that's how you start earning that income. Now let's go out on a monthly basis here. So let's do August 6th at this $12 strike. Now this is $1.68 per share. So when you click this, go to continue, one share or one contract at $1.65. Now that's $165 you just earned by placing that trade, guys. As soon as you place this trade, now it says deposit funds here. We already talked about it. I don't have the $1,200 in collateral needed. As soon as that trade is placed and that gets fulfilled, this $165 automatically goes into your account. It will automatically show up here in this buying power available as soon as this trade is fulfilled. So guys, that is a very basic understanding of how to sell put options. Now, what I want to show you here is that I actually did this last week, and I got assigned those 100 shares. So I had I sold some put options on Wish, and my expiration date was set for July 2nd. And as you can see here, I got assigned those 100 shares, because if we go back and look on July 2nd, the stock price was underneath that $12. It closed around $11.66. So then, since that was below my strike price, like we talked about, I got assigned the 100 shares. I had to use $1,200 to purchase. That was used for collateral to purchase those 100 shares, and now I own them. Now, there's different ways you can do this. I can just keep the position here. What I'm going to actually do is I'm going to be selling calls now on these 100 shares, because for your collateral, when you're selling calls, it's actually shares, not cash. But again, I'll talk about selling covered calls and the wheel strategy in different videos. But like I said, guys, that was a very basic understanding, and I hope you followed enough through that video and now have a better understanding of how you can earn that weekly and monthly income from selling put options. So again, guys, I hope this video really did help you all out. Thank you all so much for watching. If you guys could help me out and just hit that like button if you got some value from this video. If you didn't, by all means, don't click that like button. But if this video did help you, please hit that like button. Also, you guys can get some of those free stocks using those links down below in the description. Check out the options course if you're interested. And I also have a Discord where I talk about my options plays that I'm currently making real time. I'll let you guys know as soon as I'm making those trades on when I'm, if I'm selling some put options, call options, buying call options, whatever it may be. You guys can join that Discord down below by signing up through Patreon. Again, guys, thank you all so much for watching. And until the next video, you all take care.